It is the first episode of The Workshop. Today, our first guest is none other than the man himself. It is JONZi Trades. JONZi, welcome to the show. Absolutely delighted to have you on as our first guest on The Workshop. How are you doing?
I'm doing great. Thanks for having me. Excited to
We
get
are
into it.
excited to have you on, man. So yeah, to give you guys a quick overview of what this show is going to be and what we're going to try and accomplish. It's going to be like sitting down with JONZi, with our guest trader for a week, watching over their shoulder, what you're going to pick up from that trader in that time. We're going to try and distill that into an hour show or maybe slightly longer. It's going to be as high signal as possible, as high alpha as possible, try and remove as much fluff as possible and give you as much value for your time as we can. So with that in mind, JONZi, we're going to kick things off with immediate effect. And maybe you can give our audience just a quick overview, a whistle-stop tour of your origin story, who you are, how you got into trading, and how you got to where you are today.
Sure. So my name's JONZi. I've been trading since basically COVID. I was looking for some additional way to make money when I wasn't really working, and I came across crypto trading. Went through the whole tumultuous win a lot, lose a lot. Had 70% down days on my portfolio, almost quit multiple times, but stuck around long enough to kind of figure things out and learn how to develop my system in trading. And came across basically Chroma. I think, what has it been, like probably 4 years now?
Man.
Coming on that. Started as like a member there, became talent, and I've been working as an analyst there for now 3 years. I also teach middle school math outside of trading for my IRL job. So between kind of balance and then also teaching people how to trade the charts, I find time for my trading and have developed a system that's been quite profitable for me, especially over the past couple of months.
That's awesome, man. And yeah, that's something we are going to get into a little bit more detail, particularly your prop success over the last few months. But I guess it's a similar path. Like a lot of guys had the same thing. I also started trading around COVID. And I think a lot of guys did. What's interesting to me is how many guys picked up the vocation and ended up dropping out or ended up just not sticking with it. It's a brutal game, and it's one of those things where longevity is everything, and survival is key. So it's awesome that you're still here, as am I, as is the remainder of the class of 2021, even though there's been a lot of fallen soldiers along the way. So I guess the crux of this show is kind of like, how do we define the JONZi style of trading? Like, what does that actually mean? What do you look for in the charts? Now, I think that before the show, we spoke a little bit about, your style and how you would define it. Maybe you can define your style for our audience in a few simple words.
Sure. I would say high R, probably low win rate, or lately has been quite better actually. But using a culmination of harmonics, ice lines, quarterly theory, and a little EMA sprinkled in there from time to time.
Okay, so our harmonics, ice lines, quarterly theory, this is something we spoke about a little bit before the show. There's probably going to be a lot of people watching this that have never even heard of those TA concepts. And as I jump over into your chart here, maybe you can talk us through, first of all, this is a BTC long that you're currently in, is that correct?
Correct, yeah. So setup I shared in Chroma last Friday.
And you're up what, like 12 or 13 or to the good? Yeah, even
right now
more.
it's about 15, yeah.
Not bad. And I think, yeah, am I allowed to say how much money that is?
Sure.
Yeah, I
Yeah,
think you're up like 30 grand, right?
yeah, yeah. Yeah, it's gonna be a big one if it goes all the way. But
Crazy. So that's
we'll
actually
see.
that's a great context in which to frame this question. So to give you guys a little bit of background, and we can speak about this a little bit later in the chat. JONZi finished 8th on the Breakout leaderboard last month with about $57,000 in payouts, or slightly more than that. He absolutely killed it. I was watching everything unfold on a day-to-day basis. He was calling trades in advance. He was making he was making a ton of money, and also like getting that money paid out into his account. I think you were requesting payouts like pretty regularly, like every few days, right?
Yeah, I think that's like been the biggest game changer since switching over to Breakout is like the daily payout. You can do multiple a day, but basically payouts on demand as long as you have 50% or not 50%, $50 or more in profit, you can just request a payout. They reset the account and you can start trading right away.
Shout out Breakout, the quick plug there. But yeah, no, I know you have you've done really well with them over the last few months. So to rewind it a little bit, let's talk about the trades you take. Let's talk about your style of trading. You mentioned harmonics there. There's a shark on the chart. I know what this is. Anyone from the Discord knows what this is. What the hell is this shark doing on the chart, and what are harmonics?
Yeah, I mean, a lot of people when they hear harmonics, they might have came across them on X or somewhere else and learning different ways of trading. I think the simplest way to think about them is ultimately looking at Fibonacci retracements, because at the end of the day, that's all it is. You're looking at price creating certain retracements that fit within certain values, and then they create different types of patterns, and as a result, provide reactions and lead to either expansions or sell-offs. So typically what you're looking for in a chart with it is some M or W shaped pattern. There's two main tools you would use, either this XABCD tool or the Cipher pattern tool. I can show one example actually that we had back over here on the daily. You can see it on H4. And it's another shark, ironically. We've been printing a lot of those lately. But you always want to pull from the swing lows, and you're looking for basically your external swing highs, and then you pull to the next swing low, then you would pull to the next swing high, and then you would look for the reaction at D. Now, a lot of times what can happen is you'll sweep D, right? And this is what's called the confirmation low. So you get a type 1 reaction where it initially reacts at that pattern completion zone or the D point. And then you don't always have to sweep. You can just put in a higher low, but then you react, and typically that will lead to upwards expansion for bullish harmonics and vice versa for bearish. Now, there's obviously like many different types of harmonics. There's about like 6 primary ones that I use, and there's some slight different variations of them. I'm not going to get into all of them right now because that would be like a whole masterclass in itself. But
Right.
What you're basically looking for, though, is certain retracements from price leg from one to the next. So like from X to C here, we're moving down to the 1.13 extension of that, and that's where it reacts for potentially a shark harmonic.
So this is a shark harmonic. Obviously, there are other ones. There's the bat, there's Cipher and things like that. But the fundamentals, are they the same across all the harmonics? You're looking for that specific retrace and that specific reaction?
Yeah, I think ultimately what characterizes different harmonics is the fact that you get different retracements on certain legs. So like a bat needs to be between 0.382 to zero point 0.5 for the X to B leg. And then it always goes to the 886 for the X to D. Gartley's is always a 618 for the X to B, and it always goes to the 786 for the X to D. So it's like once you start learning them and then you practice charting them more and more, you can almost start to like see them before you actually chart it up a little bit. So it's just knowing like where they need to fit in with the constraints of what would make a valid harmonic. Because I've seen people pull like crazy M and W shapes for different harmonics, and they're like, "Oh, it's this," and I look at it on X, I'm like, "It's not really anything." But
I mean, is it complicated? Because I mean, describing it, I've known you for, yeah, as you say, coming on 4 years now, and I've been following your trading extremely closely, and even I find them quite confusing from time to time. Do you think they're complicated? Is it something that a beginner trader or someone with maybe somewhat new to the game, new to technical analysis, can pick up relatively easily, or do you consider it more of an advanced topic?
I would say it's definitely more advanced compared to stuff like market structure and maybe liquidity concepts that are more the underlying principles of trading and understanding like the market dynamics and how price moves. For me, I almost think of it more of as a level component of trading in terms of a lot of times I'll take entries at PCZs with tight stop losses and people will be like, what, like, why are you long there? It doesn't make any sense. Like we have other reasons for us to push higher or lower and then it reacts and price pumps, example, like the trade I'm currently in. But
Yeah.
I think, yeah, definitely more advanced. But it was something I started learning when I first started trading. So I'd been exposed to it for like 5 or 6 years now, where it feels pretty secondhand at this point.
And where did you learn this stuff? Was this material that was available on X, on YouTube? Like, how did you first kind of? Because the reason I'm asking these questions is because it's such a unique style of trading, and I think you do have one of the most unique styles of trading in the space. But for someone to get into TA, to get into trading, normally they're going to be hit with, as you say, they're going to be hit with market structure, they're going to be hit with, liquidity, they're going to be hit with, imbalances, support, resistance, supply, demand, that kind of stuff. That's definitely how I started trading. So to come in and start trading harmonics, to me, it's an interesting approach, and I'm just curious to know how that happened for you.
For sure. So there was a trader when I was first getting into trading and learning like about all the different ways of technical analysis. There was a streamer, actually, he still does his stuff, named Mitch Ray. He does more like crypto, equities, and stock-based stuff on YouTube. And ultimately, his trading style is all like high time frame swing setups, and he primarily focuses on harmonics, one thing, ice lines the second. So those were two things that over the years I've kept as part of my trading strategy, and then does like the MACD RSI divergence and some more retail patterns like head and shoulders, wedges, and other types of candlestick patterns like I love using, the rising three methods and that sort of thing. So I mainly started with his content as kind of where I wanted to focus my efforts when I was first getting into trading. And then over the years, I've adapted it to fit more of my system that I have now.
Okay, I love that. You just mentioned ice lines. Let's move on. What are ice lines? How do you use them in your trading? Are they just a type of support resistance line, or is there more to them?
For sure. I mean, I think the term itself is kind of interesting. Because ultimately you can think about like a skater on ice. Well, typically if they fall through the ice, they would drop down. So what ice lines are is basically historical levels across a chart in the form of, you can do it on the weekly time frame with daily candle closures and also, or weekly candle closures and weekly swing highs and lows in the form of wicks. I primarily find, especially with crypto, that it's better to use daily structure just because there's not enough years of data for it to make sense for the weekly. BTC might be the only one you could argue for the weekly, but something like Forex that dates back to the 70s for price action history, I would prefer to use higher time frame like weekly to chart them. But basically, this is just an example I use actually quite frequently during my one-on-ones when I teach some of the members how to like plot them. This is Joe. I don't know if you remember this coin from AVAX system back in
from way back in the day. Yeah.
Yeah. So, but ultimately, you always want to start on the far left of your chart. I'll start by marking out like the swing low, swing high for like the local levels. And then I'll start looking at where we potentially have other swing lows and highs that either form like above them or below them, or even sometimes in between. So like in this case, I plotted this one because you can see it gets retested there. And then we have these two new swing highs. And what happens basically is you can almost treat them like small ranges. For if price fails to flip one level into support or retests it bearishly, right, then you're looking for typically a move down to the next level of support. If that fails, you look for a move down, so on and so forth. So what happens is, though, historically over time, you gain all these swing highs and lows that eventually become support and resistance levels throughout the chart's history. So if you look here, we have this low here that's support here. It's kind of like a support resistance point here that becomes bearish. This wicks up and it actually runs back up to this previous point here, which was kind of like support until it became resistance there. And then later on, when that finally gets flipped, right now that's support. And then you have all these other levels to look to play around. And they're not just good for like a one-time use. Like I keep all my ice lines on like all like throughout the entire history of the chart, because like these levels that were relative back in like 2023 are still very much relative later in 2025 in this chart, right? So it basically provides just another way for me to look at bias with trading or seeing if price is moving to and from certain levels. Where can I expect us to go to next? Where might there next be a potential support or resistance level that I need to be wary of? And then I combine that alongside like fair value gaps, equal highs, equal lows, other forms of liquidity to kind of align with my trading and how I want to execute around that.
Yeah, that makes a ton of sense. I mean, it's like you're just looking back at areas on the chart where buyers and sellers have been interested previously, historically, and therefore might be interested again, right? I guess it's the same idea as, looking at points of interest on any chart, whether they're based on supply demand, based on areas of high volume, right, in a volume profile, or areas of support and resistance. And I guess that's the crux of my question there is, what differentiates these from support resistance lines, or are they just a version of support resistance? Is it just like is it support and resistance with some additional factors of confluence, or how do they fit within the support resistance kind of paradigm?
Yeah, I think that's a great question. I think at the end of the day, you can very much just think of them as like support resistance lines that are based in historical levels, that like you're looking at more like the oldest point of price history versus like I know traders might like look at this zone here and say, okay, we had these like wicks up here. This is a resistance point that now like over here is getting flipped into a support, which is definitely valid and another way you can do it. But I already have those kind of levels kind of characterized with the ice lines dating back to more of like the origins of the move. So it's just another way of viewing the same sort of TA concepts.
I love that. I love that. Very, very interesting. And again, very different from how I trade myself. So always fascinating to get insight from guys who look at things slightly differently than I do. The last kind of, if there was a triumvirate of your trading style, the last part I want to look at is quarterly theory. Can you talk us through what quarterly theory is and how you use it in your trading?
Yeah. I'll try to be short with it because I think it's something that you could spend a lot of time on
Hours, yeah.
explaining. Yeah. But for those of you who might be familiar with like the Forex or indices markets or ICT, might have heard of the term like the true daily open or the midnight open, right? Where midnight New York time typically characterizes when the algorithms kick in, and you can use that level to indicate if price is above it, you can lean bullish. If it's below it, you're bearish. But Trader Day, someone who was basically following ICT, took that concept a bit further and split apart not just the day component of it, but started looking at if you split sessions into quarters, weeks into quarters, months into quarters, and even you can even do it on a yearly time frame. You get 4 different periods of price action where one's like accumulation, one's manipulation, one's distribution, and then there's the X component, which can be retracement or continuation, and sometimes that can come before the AMD or it can come at the end of it. I do not personally focus too much on those 4 different parts. I use more of the levels that get printed as a result of using the quarterly cycles on the various time frames as basically almost like temporary ice lines for my bias on that given time frame. So for example, I have this indicator, and I know like a lot of people in Chroma have access, and I've shared this with others. And basically we can look just quick on like the M15 to see kind of the quarterly sessions at work for the different sessions that we've had so far today. So a couple things is you would basically get a true session open for each 6-hour block. So this was a New York PM session yesterday, has one there. Asia session overnight had one here. London gets one. New York AM had one this morning. And then you also get your true daily open, which forms at the end of the first quarter of the day. So Asia would be the first quarter for the new day because the algorithms all kick in, or like the new trading day on indices starts at 6 p.m. Eastern. So from 6 to 12 would be Asia. Technically, according to the quarterly theory, midnight to 6 a.m. would be London. 6 a.m. to noon would be New York AM, and then noon to 6 p.m. would be New York PM, Eastern Standard Time. But yeah, the quarterly theory, all the true opens form a quarter after the first quarter of their given time frame. You also then get a true weekly open that forms once a week, and your true monthly open, which forms once a month. And they're basically levels that I use alongside ice lines and harmonics in order to provide bias and directionality with my trading.
I love that. I love that so much. So just, and again, we could spend hours and hours talking about any one of these topics, but just to touch again on the three you mentioned harmonics, ice lines, quarterly theory. They kind of form the building blocks of your trading style, of your trading strategy. You also presumably look at things like, you mentioned EMAs. Obviously, you're looking at things like market structure, momentum. Can you maybe just give us a very quick overview of what else you look for in the charts without going into any one topic in too much detail?
Yeah, I do want to quick talk about EMAs because I think I have a hidden gem with it. I used to use a bunch of different EMA bands, but I've strictly limited it to the 20, the 200, which both of those are pretty familiar with people, but I also use a 2000 EMA band. And I've found a lot of confluence with it over the past probably like 2 years or so trading, where basically if we look at like BTC on the last bull cycle, pretty much any time we bottomed from back in the low 20s to when we bottomed in 2024, we've always tagged this 2000 EMA band on H4. And then once we finally had started to shift bearish later in this cycle, that became resistance. We had that run up perfectly in January to it. And it is like you can use it across any time frame. So just an example on H4, but I find a lot of confluence with using that EMA band. But yeah, otherwise, besides that, I think a lot of it is similar, like ICT market structure concepts, at fair value gaps. I don't really use order blocks or breaker blocks a ton. I try to just focus on more of the levels that I have with the quarterly and ice line concepts, and then using kind of like the EMA's stuff for more directionality and bias with it.
I love that. Yeah, I really, really like that. And it's something that you said to me years ago that's like stuck in my head ever since is you're a big fan of like theory crafting when you're creating a trade or looking for a setup, which is, to my mind, it's, you're not just looking at one thing or another thing. You're kind of adding these various factors of confluence into your kind of bias, into your view on the chart, in order to, as you say, in order to craft a theory, in order to craft a trade thesis that makes sense and is going to give you a high probability of playing out, right?
Exactly. Like I think the trade I took last Friday is a good example of it. Going into the end of the week, because a lot of times with the harmonics, you'll get the A, B, C completed, and that's when you can start to hypothesize which one it's going to be, depending on where D is going to go, and then that's where you know to take action at that level. So in this case, like we had already started trending down towards the 886. I felt confident that it would be a shark. My whole bias with it, in terms of like feeling confident executing with such a tight stop loss there, was that we had all these built up lows down here, your favorite Pikachu lows. That my theory was that if we weren't just going to drop through that and probably head lower to like 60K or maybe even below that, that we would need to see a reaction there and then hopefully lead to expansion higher to take out some of the liquidity above with the equal highs. And every time we've printed a monthly FEG on this bear market downtrend, we've always come back and tapped into it before lower. So kind of banking on that happening here before potentially lower prices later this year. So yeah, that's the kind of like the theory crafting that I go through with taking the setups.
I love that. Maybe just to look at, because I mean, guys are going to look at this trade and they're going to, I don't know what they're going to think. I mean, it's a crazy setup. It's 40 or to the upside. I think your risk on the trade was what, like 2K? So you stand to make like 80K or 80 grand on the setup, something like that, which is nuts. I mean, because I will say from personal experience, a lot of the guys who take the higher or setups typically don't risk a lot. And a lot of it is kind of, I'll put it politely, it's posturing for social media, guys talking about 100 or months and stuff like that, but there's no money behind it. You seem to be a very positive anomaly in that sense, in that you're printing these 30, 40, 50 or months, but you're also you're also printing, 57K in verified payouts months and things of that nature. So I mean, it's a fascinating trade to look at. Maybe you can talk just a little bit more about your and we will talk about your trading strategy in a moment, but just talk about your win rate and the type of trade that you take, because you're well known. I mean, in our community, in my trading circles, you're well known as being the guy who takes the high or setups, right? You're always looking for the big or return. But the flip side of that is, and you alluded to it already, maybe you have a slightly lower win rate than many other traders, like maybe in around, sometimes as low as 30, 25, 35, 40%. That's a tough trading system to run. I know that from experience, because you have to account for the 60 or 65 or 70% losing rate, that can be psychologically difficult. Maybe you can talk us a little bit through that. Like, was that a trading style that you always had? Was that something that you kind of came around to after a while? How did that come around?
I think back when I first got into trading, I mean, before I even knew what like the long short tool and R to R was, I was kind of just trying out different things. And I think I always kind of gravitated towards strategies where my invalidation was relatively close to entry, and I would always try to get the most bang for my buck with setups, which, yes, obviously results in a lot of setups where you lose or you get stop break even. But I think as a result, over the years now, I've kind of gained confidence in those types of setups. One, because I no longer am like deterred if I go on losing streaks, because I've seen the data over multiple years, especially with like our trade tracker, where I can see even if I lose 5 or 6 trades in a row, that I'm 1 or 2 away from being much more net positive. And as a result, I don't really get like upset or bothered by losses at this point in time. Like if I just kind of take it on the chin, move on to the next one. Obviously, if I get like a couple in a row, it can be a little discouraging and maybe I take a break for a day or two. But I think all in all, my style of trading definitely isn't for everyone. I know everyone's has different types of, what's the word for it? They're able to like handle certain things, and for me, like I can handle
different
that.
tolerances. Yeah,
exactly. Yeah, that was the word. So I think, but for me, like being able to then hit the big winners and stuff always feels nice. Obviously, the payouts are always great as a result. And I think being comfortable with that in the long run has made me confident in executing in such a fashion. I've definitely had months where I've had like 20 to 30% win rate, but I'm still up like 40R. I think last month for July was actually probably one of the more outlier months, but I ended up with, one sec, I have it rolled up right here. I pulled it up ahead of time, but it was pretty crazy month. It was about, 26 trades, 50% win rates. And then it was like 30 to 32R, roughly, including some TradFi plays. But yeah, I think the results speak for themselves.
Yeah, I mean, that's crazy. So I want to touch on that. I just want to go back to something you said, which is that the data gives you confidence. And I love that. This is something that I've spoken about numerous times on stream, which is that when you have the data to back up the positive expectancy of your system. So positive expectancy is basically, that you're profitable given a large enough sample size. You know that over time you will make money running that system. When you're running a positive expectancy system, the losses aren't failures, right? If you're running a positive expectancy system and you have a 40% win rate, you shouldn't look at the 60% of trades that you lose as failures. They're not failures. They are just a part of running that system. They're the cost of business of running that system, right? And I've said this a bunch of times before. In trading, systematic losing is the foundation for systematic winning, right? And a lot of beginner traders come into trading and they can't get their heads around that, because they associate, it's a very human thing, is to associate losing with failure, right? You lose a trade, you go, I'm a failure. You lose 3 or 4 trades in a row, you go, my system is broken. But that's not the case, and that could be a very dangerous mindset to adopt. So I love the fact that you've touched on that already the data, you know that your system is profitable, you know that it gives you positive expectancy, and you have the data to back that up. So that gives you the confidence, even if you're on, you know, a 4 or 5 trade losing streak, to keep running your system without making any major deviations. I love that. I also want to touch on, you know, you just mentioned there, last month, you spoke about your win rate, you spoke about your net or. Let's talk about your July and how you ended up on the Breakout leaderboard, because you finished 8th on the leaderboard. You had $57,600 in verified prop payouts, which is just crazy and an incredible performance. I watched it all live. I was just as impressed on the first payout as I was with the last payout. Maybe talk us through that month. Like, how was it for you going from the first few trades to the last few trades? How were your emotions? Like, how did you navigate the highs, the lows, the winning streaks, the losing streaks? How was July for you trading?
Yeah. Before we get into that, I do want to touch on one point in terms of like the data to backing your confidence. I thank journaling for providing that, because if I wasn't journaling and collecting the data, I wouldn't have all those points over the years. So if you're not journaling, I highly recommend it. This is also allowing me now to go back and look at July and see, okay, how was the start of the month? How did things go? July started off a little rough. We had a total of 2 break evens, then a loss, and then 3 more break evens. So it was definitely tricky for like the first couple days. I hit like a 2R trade, and then I hit like a 15R trade. So I hit like 2 nice bangers. Then there was like another 4R win. So at that point, I was up probably like 19R. And then I went on a period of 1 loss, 1 break even, 2 losses, 2 break evens, another loss. So again, like my system as a whole is not always going to be up only. There are definitely a handful of times where I'm hitting those losses and those break evens, but the expectancy is that I will continue to perform well. And I think knowing when to go break even is also a really important facet to my trading strategy. I'm not advocating that everyone needs to do it, but I think if you know where your first problem area is in a setup in terms of like, once you reach a level, it could potentially reverse here. That's usually my indicator for when I want to go break even, because if we aren't able to break that level and continue in the direction that I'm looking for, that's usually a good indication that potentially my bias was incorrect, and I'd rather take the break even, maybe lose a little bit on fees, and then look for a new setup instead of end up taking a loss and round tripping a bunch of profit. But yeah, after a handful of other break evens, I hit 2 more winners, a 7R, 4R, a couple more break evens and a loss. Then I hit.
And at that point, how much are you up? Because you have been requesting payouts the entire time. Like, as soon as you got a big win, you had your, you were funded with Breakout for 200K, 100K?
I think during June, I was doing 100Ks, and then I went for the 200Ks later in July. So yeah, I was trading 200Ks at that point.
And each time you got like a big win, you would hit your profit target, and then you would request that money immediately, right? Is that correct?
Yeah, I have some ideas for what I might slightly adjust going forward with that, but we can talk about that later when we get more into the props stuff. But yeah, I like the 6th I requested 140, the 9th was 16,200, the 10th was 2,700, the 16th was 12,500, and then like a couple other 4,000 ones towards the end of the month.
I mean,
yeah, and then like a 6K.
It's crazy, man. Yeah, I mean, I saw it. I was witnessing it live, and like I said, just crazy impressive. You were really on a generational run, and it was a pleasure to see. Just to go back to that month, and this is something we kind of spoke about before we went live. Like, do you consider that month, was it like an outlier month for you, or was it more a case of like, it was the culmination of all these building blocks bringing you to that moment? I think I know the answer to this, and it's, you know, reflected by your current trading and how this month is going for you. But how do you view that month in your broader trading career?
That's a good question. So I think like if we look back at like kind of my performance last year, even tail end of like 2024, I had like some crazy R gains, but I wasn't really trading prop back then. I was doing more personal accounts with much smaller size. And like I was making like good R returns, but I wasn't trading nearly the size I do now. So now I feel like it's culminated to the confidence that I have to scale up and trade bigger sizes. The first half of the year was definitely a little slow for me. I would have like 3 to 10 R months, and which is still great, don't get me wrong, but compared to what I'd been used to during 2025, it was definitely lower performance than what I'm doing now again. The past 2 months and specifically like last month have been really strong culminations of kind of where I've gotten to with my trading style and how I execute in the charts.
I love that. I really like that. And yeah, and I saw it. As I said, I saw it. I witnessed it. And to me, it definitely did feel like, yeah, a culmination at the end of all this hard work, all this kind of, building towards something, and it really felt like a nice crescendo. And as I said, it's still ongoing. We'll come back to prop. I just want to rewind a little bit and talk about your perfect setup, right? And I know that a perfect setup doesn't exist, but maybe let's talk about what does an A+ setup look like for you? What boxes need to be ticked in order for you to think, okay, this is everything I want to see in a potential trade?
Yeah, so I mean, I think for a swing play, we're kind of looking at one on the chart right here. We have like a bunch of different liquidity levels that I'm interested in. We have a harmonic. We have the quarterly levels lining up with what I wanted to see, and the PA playing out as a result of that. So for me, like a perfect swing setup would be literally this, where it's like a high time frame swing long with tight invalidation and lots of potential upside, at least on the long case in this scenario, to play out as a result. Scalp might look a little bit different. I tend not to use harmonics as much for scalps. Not to say that they can't work on low time frame, but I would say my scalp M1 to M15 style trading is more aligned with using the quarterly levels, having all the different true opens to trade around, and then I'll use stuff like 3 drives or rising 3 valleys, falling 3 peaks, all the different types of candlestick patterns, alongside like the EMAs to look for a move. So I would have to go through my journal to see if I could find one. I don't know if we want to do that right now, but yeah, I think this would be a good indication of like a swing setup. And the one analogy I like to think about with trading is baking a cake, right? So if you have all your different ingredients together, right? In this case, I have my harmonic, I have my liquidity, I have the ice lines, the quarterly theory, the EMAs, like I have all my ingredients together to make a really nice cake. So if they come together in the right way, that you get the delicious cake or a beautiful setup that plays out.
I love that. So stick with the cake analogy. Is there a hierarchy, right? You got to put the base of the cake on first before you put everything else. And that was the question that came to mind as you were listing the various, facets of your trading style. Like I know that for me, a lot of my trading starts with liquidity. And actually, it's funny you mentioned the long that you got into, and a lot of guys are waiting for those lows to get swept, those Pikachu lows. I was one of those guys because for me, a lot of my trading starts with the liquidity. It starts with the liquidity sweep, and then I build from there. So I know that for me, that's almost like the first building block for me in establishing a trade or establishing a bias. What does the hierarchy look like for you? Like, is there something that you give more importance when you're analyzing a chart?
Yeah, so I think for high time frame stuff or like a setup like this, I would probably I always try to look at specifically like monthly, weekly imbalances or equal highs, equal lows. So like in this case, like BTC had this big monthly FEG that I still think we tap into. Then I would probably put, after like figuring out where my liquidity is, harmonics, because I find again that's often going to tell me what levels I want to be interested at, where I want to be trading it. And then let me just go back to the chart, a little easier to think about there. So that would be like, where am I executing? Where do I want my invalidations to be? The ice lines and the quarterly theory just gives additional confluence to playing around certain levels. This wasn't the best example of it, but a lot of times, sometimes you'll get the pattern completion zone aligns nicely with an ice line, so that's an added level of confluence for support to be there. I think in this case, we kind of had like the Pikachu lows and my theory of like us not breaking through them just yet. So that kind of gave me like an SR level to give confluence for the higher R trade. And then I would say like the EMAs as the trade's progressing, I use that more to see like, is it going in the direction that I want it to versus like now where we're at, if we started to drop down below the true monthly open and lose the H4 200 EMA, I would probably look to, if it wasn't just like a little deviation, I would probably look to cut it and just take the bag there because then it's likely we're going to probably head much lower.
I love that. Want to talk a little bit now about your execution, right? So we've spoken about your analysis. We've talked about what you look for in a chart, how you do your TA. How do you make that transition then from that to actually getting into a trade, entering a trade, managing a trade, exiting a trade? Because for a lot of guys, that's the gap that they have trouble bridging, right? That's the difference in many cases between great analysts and great traders is execution. So I'm curious to know, like, are you more of a market entry guy? Are you one of these guys? Do you start like analyzing on the high time frame and then zoom in a little bit and then execute on hyper low time frame? Like, how does your execution look for you?
Yeah, so I think there was a couple of questions there. I think in terms of like working high and then going down, I definitely do that for getting more like directional bias across different time frames. So like right now in the probably midterm, I would argue we have potential upside in the next couple of weeks until we hit that monthly FVG. But then on like my high time frame chart, I'm looking for new lows down to potentially a 6-month FVG at like 38,000 later this year. So I have different time frames to align with kind of where I see the directionality of things, and then I will adjust that depending on what the PA provides as a result. So if we were to like roll over and start losing 62,000 and the setup fails, then yeah, obviously I'm gonna be switching more to a bearish bias and look to trade accordingly. I think in terms of execution, 95% of my setups are market entries. I will always kind of share my thoughts and ideas in the Chroma community and like crypto chat about like what I'm looking at, and give kind of my take on where I see price going or where I want to get involved in my channel with little updates. More often than not, I find that my best trade setups come from when I just like enter in when I feel confident in it, share it with the Chroma community, and then see it play out as a result. I try not to do too many limit setups besides maybe some of my like stock TradFi plays, because I find oftentimes in crypto I like to see reactions at certain levels and then get involved with it versus having like a major thesis, and then we nuke through the level and it didn't do what I wanted to do when we got there and I just kind of got burned on the setup. So yeah, definitely more market entries than limits, but always looking at ideas ahead of time for what I want to see happen at those levels.
I love that.
And then
go ahead.
Oh, I was just gonna say I didn't know if I answered all the questions or if there was one more I missed.
No, you do. I mean, I guess I would also love to know a little bit about how you manage your trades. So, like, I think I know the answer. You're basically a set and forget kind of guy, and I don't mean that disparagingly, but I think that something that I've seen you do is, I mean, I have seen you with absolute balls of steel on setups before where price moves really strongly in your direction and then it comes all the way back down and like almost like half your UPNL is erased and then it eventually bounces in your direction, and I just think, how did he hold that trade through that drawdown? I've seen that plenty of times before. What does your trade management look like, and has it evolved over your career?
Yeah, I mean, I definitely think it's evolved. I'm sure when I started trading, I did not have like the confidence to kind of manage things accordingly. I think what ultimately has provided like the best sort of ability to perform with execution on the charts is like when I enter a trade, I always like think about, okay, where is the first level that price could potentially reverse from? on like the lower time frames, and then also more as like a major reversal point. So again, I'm just going to use this setup because it's a really easy one to kind of talk through. But we have this like H4 for value gap here that after price reacted at the PZZ, that's kind of like the first level I'm watching. So when we inevitably made a confirmation low and pushed up through it, that gives me a little more confidence to see kind of what's happening as a result. Now, the first trouble area I would indicate on this chart, given at least my system and how I trade, would be the true monthly open, because that's going to act as a key support level for the month of August. And that happened to be right around 64,000 for this month. So when price started approaching it, or in this case, basically flipped it because we had strong expansion through it, that was the indication for me to basically be break even on the setup. Now that price has kind of come back, retraced, retested the H400, 200 EMA, and now expanded above higher, I'm now moving stops up a little bit. I'm not going to say where they are, but I basically start to manage intermittently depending on how price is reacting to the levels in my system, as it's either trading with me or against me. Obviously, in the example I gave earlier, I think if we started to see a breakdown below 64K and multiple H4 candles and starting to see us push back down, that to me would be like a signal to get out and take what profit I have. But for now, there's no reason for me to start getting bearish here. I have like my next level of interest is kind of these equal highs at around 65.6. I have an alert set. I also have an alert set around 66.8 where there's more equal highs in that monthly FEG. And then I have one at my TP. So basically, I try not to spend too much time on the charts during the day because I find historically that when I've kind of micromanaged positions, oftentimes I'll psych myself out and maybe close some of them early. I actually did that in July with two setups. One was like the 14.7R one that if I let play out to full TP would have been like 20R. And then there was another like, I think 12R one I cut short, or it was going to be 16. I cut short at 12, something like that. But I ended up leaving like 8K on the table, which again is not the end of the world. Profit's profit. I'm never going to be mad at closing out positions because I don't really do partials. I either just cut it completely or I let it ride. But it's something I definitely need to start to work on a little bit if I want to kind of maximize my profitability.
I love that. How do you draw that line? How do you strike that balance between, you know, just letting it ride, letting it go, sticking to your original guns, and kind of being flexible enough to adapt to new information and thinking, okay, maybe now's the time to cut? Because the way I see it, like, you're kind of damned if you do, you're damned if you don't. Sometimes it's the right decision, sometimes it's the wrong decision, and it's one of those things that really only experience can help with, right? Time spent trading, time in the charts. Like, how do you navigate that? Is that something that you've struggled with? Is that something that you've gotten better at?
I definitely think it is really tough because sometimes like you make the right call and it feels great. And I've had trades where it's like a 20R setup. I'm up like 10R. I go break even. It comes back, stops me break even, and then it runs to full TP. And like that hurts. But also it would hurt to round trip 10R and then take the loss as a result of it. So you kind of have to think about like what's going to upset you more and try to play around that. But I think as a result over time, I've now gained confidence, like I said, in knowing when to go break even on setups, trusting my levels to act accordingly. And then like, yeah, I will kind of trail stops a little bit. I'm not looking to like ride up just beyond the nearest like low. I definitely give a lot of breathing room, but I also do not want to give back everything, especially on like a major position like this. So I think, yeah, time's definitely helped with it. But having a system that you feel confident in your levels providing the correct directional bias is really important to understanding how to react at those levels and when to cut early and or let it ride.
Okay, and sticking with this trade for the moment, like let's forward the clock a week or two, right? Imagine that BTC has kind of has gone in your direction, the trade is working out favorably, and you run that 67K high, kind of where your mouse is right now, yeah? Imagine we get to there and price starts coming down. Like how does your trade management look there? Like, have you trailed your stop all the way up at this point? Have you trailed your stop kind of loosely? How does your emotional management work there? Because at that point, the thing that interests me about this question is like, at that point, the trade is up like what, like 35 or, and you're sitting on like 60K unrealized profit. And like, I know that every voice in my head at that point, as soon as I start seeing a sniff of a pullback, is just going to be like screaming in my ear, like, just close, close, close. Like, how do you manage that? How would that trade look for you if we got exactly what I'm describing?
Yeah, that's a great question. I think there's a couple things to consider. Like, so if we do that and we have like key levels that we've maybe mitigated, like bullish fair value gaps on the way up, I'm definitely starting to trail. I think at the minimum, my stop would be somewhere under 65K because I have an ice line there. And historically, we've typically ranged between 67 and 65K, if not back down between 65 and 62. So at the bare minimum, it would probably be there. I think though, and again, I was saying this in crypto chat earlier today, that like for this type of setup, once, like for me, the key liquidity level is the monthly fair value gap, which starts at around 66,920-ish. However, I have my TP at the true yearly open for a couple different reasons. It hasn't been retested yet. It should be like a big magnet for price to draw into before potentially going back down. But I think at that point, if we ran up to that and started reversing, I'd probably do what I did in July, where I'd hit a level and I was starting to see a bearish reaction and I was up a consequential amount where I was like, let me just take the money off the table and call it a day. Like Victor had an interesting video a couple weeks ago, I think, for, I don't know if it was Breakout or Teal Street, but he was talking about
evolving or
exactly, like a setup like that. Now it's like 0.25 or less R for the amount that it's up, which again, trailing stops, I think helps mitigate that to some respect. But I would also be pretty pissed seeing it drop down roughly 30 grand in profit from what could have been. So yeah, I think as it gets closer to this level, or if we hit 67, I would probably just close the full thing and take the win. And if I miss out on an additional 20K, so be it. Like I'm not gonna be too upset. And I can always re-enter. That's the cool thing about, if you book the profits, you withdraw it, you can always just take the rest of the setup bet if you get more confirmation on low time frame or something.
Exactly. Want to stick with execution now, but circle around to prop. We were talking about prop earlier. We were talking about all your success on Breakout. How does your prop trading look? Like what is your prop trading strategy? Because I know you have one. Maybe you can talk us through that.
For sure. Definitely when I started trading prop, like I've done FTMO, MCF when it was still around. There's been actually plenty of other prop firms that I used to trade on that no longer exist for one reason or another. But I used to have different strategies for kind of like sticking to 1% to 2% risk and slowly going my way up. But I won a giveaway from Breakout where I got like a free turbo account for 100K in June, which actually kind of kickstarted this whole like prop trading, like all the payouts I've been getting over the past 2 months. And from them, I was like, oh, cool, like 100K, let me test it out. And the difference with the turbo account is you have max 3% drawdown, which is the same as like their daily drawdown, which is not a lot. Like with fees and everything, it's very easy to blow. But what I was able to do, I passed in like, I think 2 or 3 trades with that. And then I milked a bunch of payouts before inevitably losing the account. And then my whole thesis was, well, if I made all this money off one payout, let me just like buy another challenge and try it again. And I did that where I basically kind of like one-shot challenges or evaluations. And I'm not encouraging people to do it. It's definitely a little bit degen. But in terms of the time cost analysis for it, like for me, it makes a lot more sense where if you can get like a $35 move on Ethereum, just as an example, and you're full max porting, you'll pass it. And the interesting thing is they just doubled the leverage on the 100K accounts. So you can trade 100K accounts with 200K size, but the 200K accounts do not get increased sizing. They just get more margin. So like you can have more multiple positions open. But for me going forward in the future, I will just be buying the 100Ks because now I can pass it in half of the amount of distance I need. And I also get half as much sizing, so I can trade 100Ks like 200Ks, but then you also have equally half the risk that you need to blow it. Like it's a lot easier to blow. So it's all retrospective, but for me, I like just kind of spending the money, passing the challenges of or evaluations. If I blow one or two, or I've definitely gone on sprees where I've blown a couple, then I'll eventually get funded, and then you catch like a couple nice payouts. Like this one would cover like 50 plus evaluations if it plays out. So it's like
exactly,
it's
yeah. Like
so,
the OR, I mean, it's like it's the same principle as your trading, right? You take these high OR trades, sometimes you're going to lose them, but the upside is so great that the risk return is worth it, right? It's kind of the same idea as one-shotting those prop accounts. You're going to lose a few along the way, but the upside is so great that it's worth it, right?
exactly. And again, it's not meant for everybody. I think in terms of if you want to build more confidence around like executing and following risk management more aligned with, I guess, like what you could argue as appropriate levels. I mean, for me, I think it's appropriate because it's just what's proven to be profitable to me and it works according to my system. But people who might stick to like 1% risk or less, like might do for a more conservative approach to how they do evaluations and prop trading.
I love that. Yeah, shout out Breakout. You guys know we've been partnered with them for several years now. And also shout out Kraken Pro. They've built a new prop firm on the Breakout backend. So if you are funded for the max allocation on Breakout, you can, of course, get funded on Kraken Pro and double that allocation. I'm going to flick out of your chart here, and we're going to just jump back into the chatting screen as we kind of approach the last few minutes of the stream here. And I just want to talk quickly. We've covered your TA, we've covered the analysis, we've covered what you look for in the chart, we've covered how you translate that to good execution, we've covered your prop trading. The last question I have is to do with mindset. It's to do with trader psychology. Like, what is the big difference in your psychology now in August 2026 compared to where it was, maybe 2 years ago, compared to where it was at the start of your journey? And have there been any, like, I don't want to reduce it to like one moment, but have there been any like light bulb moments for you when it comes to when it comes to like the mental side of trading or the emotional side of trading?
Yeah. I think in terms of moments, I think that time, I remember exactly the night. It was either Halloween or Halloween Eve 2021. Mana was pumping like 100, 200% in like a day or two. And I tried shorting it and I lost 70% of my port. And I remember spending it alone crying, being like, oh, I'm never doing that again. And that's kind of what made me like really start to learn about the educational stuff and like the risk management and taking time to really educate myself and understanding technical analysis concepts. So I think that was a key moment. I think a lot of what's happened over the past year or two in terms of it's just been kind of like a long period of developing my system and getting comfortable with how I trade and what fits kind of my niche as a person. Again, everybody I think needs to go out, spend a couple years developing their system, trying out new strategies, seeing what works, what doesn't work, journal it, collect the data, do all the stuff that you need to do. I think if you're just like not adequately putting the energy and effort in, you're not going to get the results that you're looking to get out of it. So that's like a huge thing. I think it's like a very big, like what you put in, you get out. And I think also that my favorite motto with trading is like anything can happen, nothing matters. A lot of times people feel like, oh, price can't do this for XYZ reason. And a lot of times like the market can remain irrational longer than you can remain solvent. So I think ultimately, like I always just try to trade the charts. I don't really overthink it too much. So I'll keep an eye on like macro news and everything, but more often than not, you get like bullish news on like CPI or NFP data and like price nukes or vice versa. So like I don't try to like sit there and decipher it too much. I try to focus on the variables that I can control, which is how I analyze and mark up charts and then execute as a result. And I just let the rest kind of do its own thing and I'll react accordingly to whatever happens. And I think all in all, like just the more that you are able to take a step back from the charts, the better it is in the long run. I definitely think there's a bit of like time spent on it initially when you're getting started to getting that experience. But as time goes on, I think the less time you spend on charts, almost like the better it is for your trading performance. Like set the alerts and just kind of come back to it when you hit those levels and have plans in place and trade that.
Yeah, management versus micromanagement, I guess. And that's something that, yeah, I think most traders are still working on, even advanced traders. Last question for you, JONZi, before we wrap things up. What is the one piece of advice that you would give a beginner trader, or that you could give yourself, 4 or 5 years ago at the start of your journey? What's the one piece of advice that you would give a new trader?
I guess like it's kind of like cliche, but you gotta pay your tuition to the market in one form or another, whether it be your time, your money, or your just like stress and overall like time spent on the charts. But I think like taking care of yourself and prioritize like your health and your time with family and friends and doing things outside of trading is equally as important in order to have a more complete life in that regard. It's like trading doesn't have to be the end all be all. It's simply just another way to make money and elevate your lifestyle in whatever way that fits your way that you want to live.
I love that, man. What a nice note to end things on. Guys, this was JONZi Trades. JONZi Trades, where can we find you on X?
Yeah, on X, and in Chroma.
Yeah.
That's primarily where I spend most of my time.
On X at JONZi Trades. Guys, please go give him a follow if for some reason you are not already. Thank you so much, JONZi. This was an absolutely incredible hour. Always a pleasure to talk to you. And yeah, guys, I hope you got some value for your time. Like I said at the top of the stream, JONZi is he's one of the most unique traders in the space, but also just one of the most fucking talented and one of the highest performers in what are commonly described as choppy market conditions, right? A lot of guys, myself included, saying that the market has not been very easy to trade lately. And then you have guys like JONZi pulling out $57,000 verified payout months on Breakout and, sitting in a 30K UPNL trade at the moment and making it look easy in the best possible way. JONZi, thank you so much for joining us, guys. Thank you. Yeah, thank you for being here. This was episode 1 of the workshop. We will, of course, be back in 2 weeks with another episode of the workshop where we deep dive into traders, their trading styles, their methodology, their technical analysis, and their execution. So until then, guys, stay safe, try not to get liquidated, and we'll see you next time. JONZi, thanks again. Take it easy, guys. Bye-bye.
Peace.